What's going on, guys? Hammy here with a quick rundown on this Zillow play that we were talking about yesterday during our end of day session. But we've also talked about this thing going back like 8 weeks because we were able to identify this horizontal level accumulation pattern. And it appears that potentially we could be starting to break out of it. So we're going to go through the thought process here, the potential play here, and maybe some of the setbacks on this play, just so we keep everything in focus. So first off, I want to point out that if you're in the trading initiative, you understand the Wyckoff market model, right? The market generally moves in 4 different cycles. You have a markdown, an accumulation, a markup, a distribution, and then this pattern repeats and repeats and repeats. And over time, hopefully this markup period is going to be higher than the markdown period, which is going to give you this sort of price action up and to the right, right? So Wyckoff went through this big, long experiment trying to categorize these different cycles, and now we utilize them when trading through technical analysis. And within TTI, this is a pretty core tenet. So what does this look like here? It looks like after Zillow ran up in 2020, we peaked, we hit this parabolic move into a capitulation candle, and we get this very long, year-long markdown period, right? We're trading below the 200-day moving average. We're oscillating more or less below the 50 on the RSI. This is a vintage downtrend. But what did we get starting in 2022? We started to flatten out and get this pseudo-rounded bottom here. Pseudo-rounded bottoms are a great indication of accumulation, specifically within funds and banks and institutions and stuff. Essentially, fundamental traders are going, listen, value is there. We need to be buying Zillow down at this in between $30, $40 area all the way down towards 20 something. Essentially, it's just so cheap that we need to start soaking the bid and buying the stuff. And that's how we get these long duration horizontal channels, and we can essentially view these as accumulation patterns, right? So I'm just going to write out ACC for accumulation, and this is generally what it looks like after a prolonged markdown period. We get a prolonged sideways channel, and that's this portion of the Wyckoff market model: markdown, accumulation, markup, distribution, and eventually goes up and to the right. So we've been looking at Zillow for a while. And this is technically a real estate name, right? So it's in a bunch of Vanguard ETFs and stuff. A majority of the shares are going to be held within Vanguard real estate related funds. All right. So you have to keep that in mind. This is not going to be a tech name, even though it's Zillow. This is a real estate name. But on the backside, the industry is going to be internet, right? So FDN, if you're privy to the TTI system, you know what this is. And this is one of the worst performing ETFs going back through 2022. So we wanted to make sure when we first started recognizing this accumulation pattern within Zillow that FDN was starting to give us some sort of relative strength before we entered. And over the last, 4 weeks, FDN has been starting to give us some relative strength. So there's some back-end ETF flow to back up this idea, as well as you can see, this absolute breakout that we're about to go through. So ETFs are confirming this. We get that Wyckoff market model, that classic accumulation pattern that's confirming this, and now we got the potential absolute breakout. So we're going to talk through this really quick. Very simple setup. Horizontal resistance area going back, 8 months, something like that, at around the $40 area. You can reasonably pick any value out within that $35 to $40 area as your breakout spot, but $40, nice big round number, psychological number. It's going to be in headlines today. It was in headlines yesterday. Let's just call $40 the breakout spot. And we are now trading above the 200-day moving average. This is important. But what I will say is the 200-day moving average is still technically not sloping up. So that would be an edge in our favor for this 200-day moving average if we were able to flatten out this and start heading up to the upside. Generally, that leads to more sustained rallies. I'm not saying that we can't continue on up off of this Zillow breakout, but we would like the moving average to be sloping up already. Maybe the moving average catches up over the next week. Totally possible. But just want to throw that out there that generally speaking, these breakouts are stronger when the moving average is already beginning to slope to the upside. All right, so you got the rounded bottom, horizontal level break. If you're in TTI, this is a classic pattern that we like to buy. Another thing, the RSI is technically above the 50, right? We're up here near the 70, which is very bullish within TTI. We like to buy above the 50 RSI and ride this thing as long as possible. We do not sell at the 70, but we did fall out of a bullish momentum regime towards the end of December. Now, if you were trading end of December, it was a very volatile, like week and a half, 2 weeks coming up into the Santa rally, etc. Internet names in particular, software names really sold off hard. So this bullish momentum regime really got clapped. But we are back up and over the 50. So this is not going to be like an A plus setup in regards to the bullish momentum regime and the moving average, but this is a high B plus potential A minus setup because we got the extended horizontal base. We got the FDN and ETF inflows coming in. We got the horizontal level break, rounded bottom. We like this setup. The only other thing I want to bring up before we get into price targets, we have a majority of this volume underneath the 40. Right, so if we actually zoom out and we look at the VRVP here, we can see that we are underneath, or we are above rather, the volume is underneath here, somewhere around 35 bucks. So, you know, if you're in TTI, you know this, that generally speaking, your volume is on the other side of where you're trying to go, right? So we're trying to go up, volume's on the underside. There's going to be less resistance through the breakout here because there's just going to be less volume that we have to potentially fight through, previous price action, etc. So the fact that volume is below current price gives us a little bit more support if price does draw back down, and seeing as how price is beginning to draw down today, we could be looking at a potential BRB setup. For anybody that's not in TTI, we will be looking to either enter into an original position or add in potentially if we've already entered into Zillow here on this pullback in towards the horizontal level near 40. We do know that this was a high volume breakout yesterday, so the odds of a pullback within the next 2 or 3 days are around 66%, and we are getting that. This is a 3.97 ADR, meaning it's going to be very volatile intraday. This is a great opportunity to get long a real estate / internet related name that really sold off a lot over the last 2 years and then hit this accumulation pattern. Last thing I want to point out is this fib idea here. Now, we're targeting the maze. If you're an options trader, the maze have an incredible opportunity there on the 50-55 called debit spreads. They're going for about $1 right now with a max profit of $4, so it's a 4-to-1 setup. That's phenomenal. You can also get away with just buying calls. The IV is not too crazy, but if you want to limit the risk and kind of reduce that cost basis, you can grab right now the 50-55 called debit spread in May for about $1, max profit of $4. If you want to buy straight calls as well, that the IV says that's totally fine. If we want to run a basic fib extension and just kind of get a general idea of what we're looking at here. Now, if we're buying Mays, we're obviously not going to try to just capture this $48 move. We're looking out a little bit further, and we can confirm that with this volume that we're going to go through in a second. But this gives us a general idea of risk versus reward. Does the trade make sense? And what we came up with within TTI after drawing this fib extension, from bottom of range to top of range here at around $40, we said, listen, let's give, since we're buying Mays, let's give Zillow some more opportunity to work here. We're going to give it a little bit more wiggle room than what we normally would. We're going to give it all the way down to about sub 200 MA, right? So we're talking like the 36 or the 35.5 area. We're going to give it that much wiggle room to come back. Let's say market chops. Let's say we get, internet sells off for a day or two and Zillow gets hit. But maybe it's just an ETF outflow type thing and Zillow's right back up where it was 2 days later. We don't want to get cut too short on a position that we're looking 100 plus days out, right? So we're going to give this thing as much room as reasonably possible. If it does come down here and clip the 35.5 area and we decide to cut it, there's still going to be premium on the contract. We could probably get out with about, 40-30% left on the contract, which is better than zero. So if the trade just fails to manifest, there's still going to be something back, right? We're going to get a rebate there. But if it does hit, right? If it does hit, we are targeting that 50 to 55 area price target. The 1.618 fib says 48, but we can confirm that there is going to be a decent amount of volume here at around that $55, which would be around the max profitability for that spread. And so we would be looking to try to hit that by May. Like I said, this is a 4% ADR, and from current price, we'll choose about 40. From current price to about $55, we're looking at about a 37% move. That's a big move spot, all right? That's the reason why we're buying Mays. If it's a 4% ADR and we're looking at like a 40% move, we would essentially need 10 perfect days in our favor, which is not going to happen, probably. But is 100 plus days enough expiration to reasonably expect something like that to manifest over that time frame? Yeah. So it's not a crazy out of the money YOLO play. It makes sense within the confines of the statistics of what the market's telling us Zillow can do. This is a great opportunity to get long a play and then just forget about it. It's not going to be something you need to manage every single day. As a matter of fact, you might only look at it a couple times a week just to glance at where price is. As long as we're above that 35.5 area, there's no reason to cut it early. And if it does drop below, we'll just close it and claw back whatever we can. This is what we focus on in TTI. We do not want to sit here and manage trades every single day, every second of the day. We come up with these macro ideas and then find the stocks that fit those macro ideas. We buy time on them, and then we go do things that we need to do, whether it's a 9 to 5, take care of our family, hobbies, other things, etc. This is what we focus on. This is how winning swing trading is done. All right, so I hope you enjoyed the video, and I'll catch you in the next one.